Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Puts. Welcome to episode 32, I believe. Uh, Not so long ago, I was talking to you guys about. Let's go on the weekly because we're talking about the weekly time frame, 10 trend lines, the primary trend line. So, we were talking about when other traders are planning on when the market makers tell me to sell the euro. I told you that I normally look for entry levels. Okay, when they tell me to sell it, I start thinking about buying it, buying the currency. It's just something that is normal. The central bankers, I think I'll get time to record another video where I explain what the market makers do. They don't trade with their own money. They use money from retail traders instead of uh, instead of investing 10 billion in the markets to push the market lower. They would rather invest 100 million to push the market above the previous high and make that uh, uh, 10 billion from retail traders money by stopping them up out, and when they get that 3 billion they then have enough money to push the market lower. So uh, macroeconomics is telling me to sell the currency, and I am looking to buy it. I'm not necessarily buying it, I'm just not looking to enter the market just yet. That's the system that I'm using currently. So this is the Euro USD, and I the USD is still telling me to buy the currency, and I will wait for time where it tells me to stop selling it. I don't like trading the Euro USD. I use very little money in the markets for that. I was talking about uh, Wyckoff schematics, or just something that is normal where we touch the trend line once, and on the second time, and on the third time we manipulate the trend line. That's just something that, the market makers are calculated investors. They focus a lot on calculated moves. Part of the reason why the market is always changing. Eh, eh, Part of the reason why the market is always showing us the same thing over and over again. They create repetitions, and those repetitions are what people call patterns. I don't call them patterns. I just look at them as an expectation that I trade what we call three drives to the top, three drives to the bottom, which is our first touch, second touch, manipulation sell. That's just something that I do. I was being asked about strategies. I don't have strategies. This thing was drawn like ages ago. I don't buy Euro USD because it's a negative carry. I only trade positive carry. So by buying the US dollar and selling the euro, I'm making money. So that's just something that I'm looking into. I had issues with the euro not telling me to sell just yet, even though the Danish krona was telling me to sell. Uh, the reason why I always talk about other currencies when I'm trading this currency uh, is because they have an economic correlation. I believe you do understand that Denmark is the capital of Europe, and it's only normal for me to believe that for example, let's talk about the Lesotho currency and the South African currency. Lesotho uh, is a, what do they call it? A landlocked country. They use South African ports. If the South African currency goes down, perhaps because of certain economic issues or tariffs, even if Lesotho does not have any tariffs, it will be affected because they are doing foreign exchange with South Africa. They buy goods from South Africa. So if the tariffs are high on either South African goods or whatever that is deteriorating the South African economy, the Lesotho currency will be affected. That's just how I compare Danish kroner or Denmark with the euro. So economic divergence are normal. Some people talk about correlations and they'll tell you about USD, Euro USD with maybe Euro JPY or Euro AUD. I don't compare economic divergences like that. I compare one currency with one currency in terms of one economy with another economy, like one country with one country. I don't compare currency pairs, I compare individual separate currencies by themselves. So here we were just talking about the euro preparing itself for sales and my expectations of where the euro is supposed to go. If you could look at this height here, I associated with this height, and this height here I associate with this height. Someone was asking me about the M pattern. I don't know what an M pattern is. I'm just showing you that. Uh, okay, I'll try to explain the system that I'm using and the price action that I'm using. It's called Wyckoff schematics, and I'll try to explain to you. I will create a video where I explain Wyckoff schematics, how it was designed to be, and how I see it. So there are two Wyckoff schematics. One it's in a bearish direction, and the other is in a bullish direction. But you don't need to know both. You just need to know one and invert it. So let's say you only know. In fact, at the moment, I only know two things on Wyckoff schematics, how to label them, which is the test and the spring. Those are the ones that are important to me. And at the moment, for as long as the USD is telling me to sell it, I will continue with this trade. I'll wait for that pullback in the euro and start selling it. And as soon as the USD, in fact, both the euro and the USD are selling for the month of September. So it's a short term trade. At the end, this thing will give us a breakout and it will fly higher than this. So the actual I don't know I don't like trading two currencies moving in the same direction because they're going to force me to make calculations and check with one currency whether the other currency will collapse faster than the other or whether the other currency is weaker than the other. So I don't like calculating. I don't like. Okay, the system that I use is called economic divergence. So if those two economies are not diverging, I'm not trading those currencies. So this is a Eurozar. It's another trade that I'm looking forward to. The euro is telling me to sell it, but look what it's doing. It's going bullish. So, okay, we might say that's because the ZAR is collapsing. But either way, this is a trade that we're looking forward to. It's not doing anything at the moment. Probably because the ZAR, we're supposed to be buying the ZAR. The reason why we are buying the South African rand and selling the euro is because the interest rates on the South African rand are higher compared to the interest rates on the euro. So the the positive carry is only the shorts. That's the reason why I have this system that reminds me that we take shorts only. So even when it's moving up there, let's say it's moving with a strong trend like this one, I won't be able to jump into the markets because of the negative carry in the bullish direction. So my money only I only get paid when I hold it short. So I'll be waiting for the market to get up there, especially because now the ZAR is weak in September. So when it's weak, even if the euro starts moving sideways, because the ZAR is weak, the market will go up there, and it will it will look like the euro is gaining strength, but it's not gaining strength. That's because the South African rand is weak. I don't want to prolong this video. I would like to conclude with this trade that both currencies are weak for the month of September, and any trade that will be taken here will be taken in the short direction. However, the USD and the ZAR are both the USD and the euro are both weak for the month of September. They're moving in the same direction, but for now, I'm trying to take an arbitrage trade between the euro and the ZAR, saying that the euro is preparing for sales and the ZAR is still bullish. If it stays bullish like that economically, I will be taking that short trade. It won't, and that short trade might take us up here. The reason why I don't believe in this major bust that we have here is because the USD is pricing in those tariffs, and the President Trump just increased the tariffs for India because India it continues to buy the Russian oil, and they are trying to blame India for funding what they call the Russian war machine. So any country that is doing business with Russia is facing tariffs. So I believe the tariffs were at 10%, if I'm not wrong. I'm not sure what the tariffs were, but overnight, President Trump increased the tariffs for India to 50%, and they are creating all kinds of commotions. So I just wish that the president of the US could, resolve all of the current tariffs, and those are negative news for the US dollar because uh, they are producing sanctions, and sanctions were designed to delay trade. They impede trade, so they affect the global supply chain. And at the moment, the global supply chain is moving down towards the negatives. It's at 0.07 at the moment, and it's moving towards the negatives, and that's because of the tariffs that are impeding the global supply chain. And we'll look into those sanctions and uh, those tariffs. Those are negative news for the USD. However, with President Trump, he can say something overnight, and the currency might pump for no reason. For just saying something, you might get something like this, but it does not necessarily to be a bullish weekly candle. It can be something like a bullish trend for 3 days and stop. So let's see each other on the next video. I'll be talking about my economic projections on other currencies. Uh, Goodbye, guys.